All right, let's talk about one of the biggest, most unavoidable costs for pretty much any UK business, business rates. A massive change is on the horizon for 2026, and honestly, it could completely reshape your bill for years to come. So, let's get you ready. I am talking about the 2026 business rates revaluation. It doesn't matter if you run a small shop on the high street, an office in the city, or a huge warehouse. These changes are coming for you. Today, we're going to break down exactly what's happening so you can get ahead of the curve.
Now, before we really dive in, I want to mention that this entire discussion has been put together by the experts over at My Tax Accountant. These guys live and breathe this stuff, so you know we're getting solid, reliable information to prepare for what's coming.
Just to give you a sense of the sheer scale we're dealing with, look at this number, over £60 billion. That's how much revenue comes from business rates and council tax combined in England and Wales. It's a huge part of how our local services get funded, which is exactly why these changes are such a big deal.
Okay, first up, let's try and solve the business rates puzzle. I know it can feel ridiculously complicated, but when you boil it down, it's really based on just a couple of key ideas. So, when that bill lands on your desk, what are you actually paying for?
At its most basic, business rates are just a tax on the right to occupy a commercial property. You can think of it as your business's contribution to the local community fund. It pays for things like libraries, parks, and fixing potholes. It's really important to remember it's not a tax on your profits, it's a tax on your property.
The foundation, the single most important number for your entire bill, is something called the rateable value, or RV for short. This is set by a government body called the Valuation Office Agency, or VOA. And all it is their best guess of what your property's annual rent would be on one specific day. Everything starts from this number.
And here's a point that trips up so many people. Your rateable value is not the same as the actual rent you pay your landlord. Your rent, that's just a private deal between you two. The RV is a government assessment, a snapshot of the market on a particular day. They can be, and very often are, two totally different figures.
To make this all feel a bit more real, let's imagine a business owner. We'll call her Sarah. She runs a little graphic design agency out of an office in London. The VOA has looked at her place and given it a rateable value of £40,000. We're going to follow Sarah's story and see how all these rules and changes might affect her real business.
Okay, with the basics down, let's get to the main event, the 2026 revaluation. This isn't just some minor tweak in the system. It's a huge shakeup that's going to affect businesses just like Sarah's all over the country.
You're going to want to pay close attention to these dates. The first one has actually already passed, April 1st, 2024. That was the antecedent valuation date. What that means is the rental market on that specific day is what's going to set your new RV. Then, by the end of December 2025, they'll publish a draft list, so you'll get your first peek. And finally, on April 1st, 2026, it all goes live.
And this brings up a really strange quirk in the system. The market conditions from way back in April 2024 are essentially locked in to decide your tax bills for the next 3 years. So if rents in your area were sky high on that one day, your rates could follow suit, even if the market has cooled off since then.
Now let's look at the next step. So we've got this rateable value, but how does that number magically turn into the final amount you have to pay? Let's decode the bill itself. It's actually simpler than it looks.
Here's the basic formula. It's your rateable value multiplied by a number the government sets each year called the multiplier, and that gives you your gross rates bill. Now, this is before any discounts or reliefs are taken off, but it's the core of the whole calculation. So what is this multiplier? Well, for the 2025-26 tax year, there are two main rates in England. If your RV is under $51,000, you use the small business multiplier, which is 49.9 pence. But if it's $51,000 or more, you jump up to the higher standard multiplier of 55.5 pence. As you can see, that creates a pretty steep cliff edge for businesses right on that borderline.
Let's check back in with Sarah. Her RV is £40,000, so she's safely under that £51,000 threshold. We just multiply her RV by the small business multiplier, and that gives her a gross annual bill of £19,960. Simple, right? But stay with me. The next point might surprise you.
That's not all. Here's where things get more complicated. From 2026, this simple two-multiplier system is expanding. We're getting new, lower multipliers for businesses in retail, hospitality, and leisure, and a new, higher multiplier for properties with a really high value. The takeaway? The system is becoming more targeted for sure, but also a lot trickier to navigate by yourself.
So, we have our gross bill. But here's the good news. Almost nobody actually pays that exact amount. The next part of the puzzle, and you could argue it's the most important, is the huge system of reliefs and discounts. Getting this right can literally save you thousands.
Let's kick off with the big one. For the smallest businesses, it's actually possible to get a 100% discount. Yep, you heard that right, a business rates bill of 0. And this is all thanks to something called Small Business Rate Relief.
So how does it work? Well, generally, it's for businesses that only use one property. If your RV is under 15,000 pounds, you're in the running. If it's 12,000 pounds or less, you get 100% relief. You pay nothing. Between 12,001 pounds and 15,000 pounds, the relief is tapered, so it gradually reduces as you go up. For so many startups and small businesses, this relief is an absolute lifeline.
Another absolutely massive area of support is for our high streets, businesses in retail, hospitality, and leisure. For the 2025/26 tax year, if you run a shop, a pub, a hotel, you can get a 40% discount on your final bill. There is a cash cap, but it provides some much-needed targeted support for these sectors.
Okay, here's a pro tip that could be really valuable. If you have an empty commercial property, you usually get relief from business rates for 3 months. Now, to get that relief again, the property used to have to be reoccupied for just 6 weeks. That reset period has now been more than doubled to 13 weeks. For landlords and investors, planning your tenancies around this new rule is absolutely key to making the most of it.
Now, you might be thinking, what if this 2026 revaluation sends my bill through the roof? Well, the government has confirmed there will be a safety net called transitional relief. It's designed to phase in any big increases gradually, so you're not hit with a massive shock. We don't know the exact details yet. We'll have to wait for the autumn budget for those, but it's good to know that system will be there.
So what happens if you get your new rateable value, you open the letter and you just think, no way, that is not right? If it feels unfair or you think it's based on wrong information, you don't just have to sit there and accept it. There is a formal process you can use to challenge it.
The system's called Check, Challenge, Appeal, and it works pretty much like it sounds. First, you check the facts the VOA has about your property, like the floor size. You can correct any mistakes online. If the facts are right, but you still think the valuation is wrong, you move to Challenge, where you submit your case with evidence. And if that's not successful, you can appeal to an independent tribunal. It's a proper, structured process to make sure things are fair.
But here is a point that is absolutely 100% crucial. While you are going through this whole process, you must continue to pay the bill they've sent you. You can't just stop paying. If your appeal is successful and it turns out you've overpaid, don't worry, you will get a refund. But not paying in the meantime can land you in serious legal trouble.
And here's one last pro tip for you. Let's be honest, the appeals process can be a real headache. A lot of businesses choose to hire a professional rating advisor to handle it. If you do that, please make sure they are members of a professional body like RICS or IRVV. This is your guarantee that they're properly qualified and regulated, and it protects you from any cowboy operators.
Wow, okay. We have covered a huge amount of ground today, from the absolute basics of rateable value all the way to the fiddly details of multipliers and the appeals process. So let's pull all that together and figure out your next steps to get ready for 2026.
If you only take 5 things away from this, make it these. 1. Your bill is just your rateable value times the multiplier. 2. The big 2026 revaluation is based on rental values from way back in April 2024. 3. The multiplier system is getting more complicated but also more targeted. 4. Reliefs are your best friend for lowering your bill, so make sure you explore every single one. And 5. You absolutely have the right to challenge a valuation you think is wrong.
Okay, before we finish up, I have to do the important legal bit. Everything we've talked about today has been for general guidance. It's super important that you don't rely on it alone to make financial decisions for your business. For advice that's tailored to your unique situation, you really should speak to an expert. And on that note, you can contact the specialists at My Tax Accountant directly. Their phone number is 0208-570-8531, and their email is info@mytaxaccountant.co.uk. They can help you get ready for these changes and make sure you're claiming every relief you're entitled to.
If you want to dive even deeper into all the details we've covered, you can read the full, in-depth article over on the My Tax Accountant blog. You can see the link on your screen right now.
And finally, for more clear, expert financial guidance just like this, make sure you go and subscribe to their YouTube channel. Thank you so much for joining me. I really hope you now feel much more prepared for the changes that are coming your way.